Okay.
All right. Hey, everyone. Welcome to our first episode of whatever this tax podcast is going to be called. So we'll jump right into it. Today's topic, we're going to be discussing in the news recently, Biden came out with a budget proposal that supposedly is going to cut the deficit by $3 trillion over the next decade, proposing some taxes on individuals that earn over $400,000 a year, including a 25% minimum tax, looking to attack some of the capital gains tax rates for high earners, as well as a corporate tax increase from 21% to a high of 28%. So, Andrew, do you have any comments about the recent proposals? Do you think it's has any legs to it if it's going to get passed or not, or do you think it's just another proposal that's probably going to sink away like many of the other ones?
To tell you the truth, with in this day and age, with the way politics is being played, and half the Congress being controlled by Democrats, half being controlled by Republicans, I honestly don't see it passing as stated
Mhm.
currently. Um, I could see tweaks being made, but I don't foresee it being passed as is, especially since I think it'll actually affect a lot of Congress people and their taxes. So I just don't see it passing as is. Because even though the Democrats have a thin majority in the Senate, some of the more middle slash conservative leaning Democrats, I don't
Mhm.
even see them voting for it, let alone most or any Republicans. Uh, so
Right.
we'll see,
Yeah.
but I doubt it. I doubt it.
Yeah, and I think that's a good point because if you look at the first iteration of Build Back Better, even with Congress being controlled by Democrats, you had the House and the Senate, you needed every single member of the Senate in order to pass that bill. You still couldn't get Manchin or Sinema, some of the more right leaning Democrats to pass that bill. So even in cases of increasing the top tax rate for individuals, that's going to be difficult. Corporate tax rate looks like it's probably going to be off the table. So, in my opinion, I agree with you. Most of these are dead on arrival, probably not going to get
Yep.
passed. But I think the bigger discussion is the next election cycle is going to be extremely important for tax policy just because you
Correct.
have the expiration of the Tax Cuts and Jobs Act. A lot of
Yep.
those provisions are going to go away in 2025. So I think this is just a setup for a conversation that they're going to have. If you don't do anything, a lot of those provisions just expire automatically. Taxes are going to increase for a lot of taxpayers, even those earning less than $400,000 a
Yes,
year.
including middle class people that they don't want to increase taxes on. And
Correct. Yep.
and honestly, a lot of the they call it sunsetting. A lot of the sunsetting laws from the Tax and Jobs Act, some of them are actually kind of popular.
Mhm.
So I think they'll want to get those extended. And you have a point that I think this could just be a jumping off point for negotiations between all parties involved, to kind of get to some middle ground at some point. Um, I think it could happen, and I actually think the least likely thing to happen is increasing the long-term capital gains rate to
Mhm.
equal your. I think they were trying to get it to equal your ordinary income tax rates, your regular tax rates
Mhm.
for the higher income earners. I that especially, I don't see that happening. I don't
It,
know.
it's going to be extremely difficult to pass just because the top tax rate, if it sunsets, it goes from 37% to 39%. And a lot of those individuals that earn more than $1 million a year, a lot of their income is in capital gains. So if you're going from a 20%, you do have the Medicare tax
Double.
rate. Yep. And not only that, there is a proposal to make that 3.8% Medicare tax to 5% now. So not only are you being taxed 37% on that capital gains, but you also have an additional 5% on top. So especially in certain states that you live in, you're looking at almost 50% tax on your capital gains, which is a massive increase.
Yeah, that's absurd. And the my problem with increasing tax rates is not like I don't like increasing taxes, of course, which is part of the reason I do what I do. But that being said, it's how the money gets wasted. And you could call waste anything you want, but that's the main crux of why a lot of people are disagreeing with increased tax rates.
Mhm. Yeah, and on that point, we've been running a budget deficit for quite some time now,
Yep.
and all the COVID spending that we did in the past couple of years, trillions of dollars, it almost seems pointless at this point, where you would have to raise taxes considerably, not just on the top 1%, but on most Americans in order to fill that budget hole over the next 10 years. So I think
Yeah.
it's going to be, especially in the next coming years, the next election cycle, what is on the table in terms of cuts, not only on tax side of increasing taxes, but also Social Security, Medicare,
Yep.
maybe some spending on the Pentagon and all that war spending. It should be interesting to see where things go in the next couple of years.
I
Especially, I
agree.
think it's probably going to be driven by tax policy.
Agreed. And what a lot of people don't really realize, I think, is even if you take every dollar of Elon Musk, Jeff Bezos, Bill Gates, add up all the billionaires, if you took every dollar of their wealth and income, that it still wouldn't cover what we need, what's being asked for.
Mhm.
So realize that it's not only about taxing the wealthy, it's about reining in spending.
Mhm.
Uh, so there's both sides of the coin need to be handled, I think.
Yeah, and I think it's a good discussion to start with, especially a lot of politicians are going to come out with their tax plans, they're going to come
Yep.
out with their spending plans. So definitely for clients, if they had questions for you in terms of which politician they might vote for, or which candidate they should go for, do you have any thoughts in terms of which party has a better tax policy, or do you think it's kind of both the same? They, at the end of the day, once they get elected, they come up with some kind of tax policy. It might hurt you, might benefit you, just depends on the year.
To tell you the real truth, I think that most tax plans and campaign policies that most politicians come up with are just talking points.
Mhm.
I don't actually think either extreme is gonna ever happen. Uh, I do think that most of the time when they come in, people come to the table and negotiate, even if we don't really know much about it. Um, and I think a what's best for everybody most likely would be a mixed bag where uh, one party might be controlling one part of the government, another party might be controlling the other part of the government, and that I think that allows nothing drastic either way to happen.
Mhm.
So that's my usual take on things is to have a good mix in there of different parties so that nothing extreme either way happens.
Yeah, and I agree with you, especially as a tax practitioner. It's
Yep.
oftentimes makes our job a lot more difficult, and it makes our clients' life a lot more difficult, especially when you
Yep.
have, for example, in 2017, the Tax Cuts and Jobs Act, when that got passed as law. Essentially, it was supposed to simplify the tax code, but it did a lot more to complicate the tax code, especially for entity tax planning, with QBI and 163J and foreign income provisions. So it should be interesting. Hopefully, they kind of come together and figure out a way to
Yep.
simplify and maybe get rid of some programs that don't necessarily help taxpayers. And
Yep.
it should be interesting to where things go. But one thing to note is that, back in the Tax Cuts and Jobs Act era, when it was supposed to be this massive tax break for a lot of taxpayers, but ultimately with the SALT tax, with that being capped at 10,000, it was almost like a tax on the wealthy individuals living in California, living in
New
New
York.
York. Do you
Yep.
have any comments on what that might look like in the future? Do you think the SALT cap is going to come back or be permanent, or do you think it's going to go back to how it was before the TCJA?
So one thing I'll say is, first of all, the Tax Cuts and Jobs Act, not only did it complicate things, it was passed in December, right
Mhm.
before we got into tax season. So I'm pretty sure it was passed in December, like at the very end of the year.
Mhm.
Uh, Now about the salt tax cap, I I don't know that it'll ever be fully repealed, but I could see it someday being maybe increased.
Mhm. Yeah, I think a good point to note is that it does sunset in 2025. So it verts back to the old way, but it's interesting because you have all those interplays between your AMT, your
Yep,
over itemized deduction limitations. So it's not as clear cut as saying you can deduct all of your taxes.
correct.
So it should be interesting in terms of planning to see what our tax code looks like. And I think it's quite important to get it right, just because, as a reminder, that 21% corporate rate is going to stay the same. So
Yep.
that was actually not sunset. That's a permanent provision. And you might have a lot of pass-through entities, especially if QBI goes away, where you might have a situation where a top taxpayer with a pass-through entity could be paying upwards of 39% on their income versus when they had QBI, it was much less. So what do you
And
think
that's
in
just on
terms
the
of
federal level. That's just on the federal level.
correct? Yeah, and when you add in all the other taxes, self-employment taxes, your state taxes, your local taxes in certain cases, if you live in New York City, it
Correct.
could be well north of 50%. So in terms of certain provisions, especially those small business tax cuts like QBI, do you think those provisions might stay in place?
Yeah, I like the QBI deduction. I could see that being extended. I could see the salt cap being extended and maybe raised. Um, what else? Yeah, I those are two things that I could kind of see being extended and maybe tweaked a little bit.
Mhm.
I don't see the increased long-term capital gains tax coming into play in reality. I think it's just a talking point to get the negotiating started.
Mhm.
Uh, and the Republicans will come up with something just as crazy on the other side, probably. Um, so, yeah, those are my two favorites that I hope stay and maybe get tweaked a little bit, especially the salt cap.
Yeah, yeah, I think just summarizing that on the Democratic side, most likely they're going to push for increased SALT cap deduction, especially a lot of millionaires and billionaires have been moving out of those states,
Yep.
and that SALT cap really hurts them. And then also probably a push for an enhanced child tax credit. I know that's been on the table for
Ah,
years.
yes,
It
that would
came
be
up
good.
during COVID, and then it might be some things that might be completely off the table, but I think those are probably on the table in terms of negotiating standpoint. Republicans
Agree.
probably don't want to touch the corporate tax rate, and they probably don't want to touch the capital gains. I think even Democrats themselves, it's going to be hard to touch that capital gains tax rate.
No, because even the Democrats won't all come and vote for that.
Mhm.
I don't think. Like you said before, cinema and mansion, I can't see that happening. Because even if you get one of the two, maybe I it
Yeah, it would. I think it's going to be part of it is the messy part is if you don't do anything before 2025 and you let everything expire, it's much harder to put together a package to reinstate things
yep,
than to put maybe a mini tax package where for certain individuals, especially those making under 400,000, right, you can keep those tax cuts. And that's essentially what happened in the previous administration. If you remember the Bush tax cuts, a
yep.
lot of those were sunsetting. They were continued for lower income individuals. So it's definitely going to be interesting to see, especially which way things go. If there's a red wave or a blue wave, or however the control lands. But I think most likely for our taxpayers and our clients, we're probably advising, nothing crazy is on the horizon just yet.
Yep. Yep.
But there's always tax planning options available for the current tax season. So what do you think is the hottest topics right now in terms of planning for clients in our current tax environment?
I think that honestly for me it would be probably nothing crazy also, but taking as much of your income now as you can
Mhm.
before any potential income tax increases.
Mhm. Yeah, so definitely deferring those deductions,
Yep.
expediting income items.
Yep.
It's almost funny because as a tax practitioner, always told to defer. So defer
Yep.
income to later years. Definitely
Yep.
when you have certain tax increases on the future, it might be better, especially for it's funny because the capital gains tax rate, it's almost you raise more money by threatening to raise the capital gains tax rate.
Yeah. Yeah.
Because
Yeah. People sell. People
a lot
sell.
of
Yep.
people just sell, pay the tax now because they think it's going to increase, and the
Yep.
government collects all this revenue, and they didn't actually have to raise the tax rate to begin with.
Yep. Yep. All right. Sounds good.
Yep. All right. Thanks again. That should be enough for today's podcast. Thanks for everyone for listening, and we'll be back again soon.
Thanks, everybody.
All right.